The stock market has not seen a worse year to date since 1962. When it comes to bonds, this has been the worst year to date performance in bonds in anyone's lifetime.
Cathie Wood just gave her latest update, and unfortunately it's looking pretty bad for the stock market and crypto investors. The US stock market is having its worst year in over 50 years. Tech stocks are having their worst year ever, and it's the worst bond market performance in over 100 years. Unfortunately, as much as I would class myself as an optimistic person, there seems to be more bad news than good right now. And so in this video, we'll be looking at the key points made by Cathie Wood and why things could be going from bad to worse for stocks and crypto. Starting with the overall economy, and everything is indicating we are going into recession.
We're hearing about layoffs. We're hearing about venture capital firms advising their companies to lay off quickly because this is bad. And that is happening. We're seeing initial unemployment claims moving up. Claims have gone from 167,000 during the week of April 1st. To 231,000. So that's a 35% increase, and that's a change in trend, to be sure. The other thing that's changing is housing. Almost every metric is showing weakness. We'll get the odd increase here and there, but housing is definitely losing steam. We got today GDP Now, which is the Atlanta Fed's version. Every day economic statistics come out. The Atlanta Fed adjusts its real GDP number for that quarter. And today they reduced it to a decline of 2.1%. So 2 weeks ago, 2 or 3 weeks ago, they had a positive 1%. Last week they went to a minus 1.1%, and now it's minus 2.1%. So put that together with real GDP at minus 1.6% in the first quarter, and we have a recession. The technical definition of a recession is 2 consecutive negative quarters of real GDP growth.
And so clearly not a good outlook. Jobless claims increasing by 35%, companies doing rounds of layoffs all over the place, inflation setting new highs all around the world, the housing market now predicted to decline, and the Atlanta Fed saying we are now already in a recession. And it looks to me we still have further to fall for stocks to get back to a more normal growth range. And some people are even saying we are only halfway to the bottom of this current crash. Next up, we have the crypto market, which is also having one of its worst years on record.
Crypto had its worst quarter since 2011. And it's a much more mature market than it was back then with the boom bust. So that's saying something. Fears of systemic collapse have been rife in the marketplace. So we've seen Bitcoin, it peaked way back in November at 69,000, and it is now at 19,500. It is still higher than its pre-COVID 7,000 to 10,000 range. And it is just about at its 2017 high. So this could be some support. It's also at, it is below its 200-week moving average, which is at 22,500. So there is some concern that that is the new resistance.
So, Bitcoin is back to its all-time high price in 2017, and we find ourselves below the 200-week moving average, which historically says is a very rare opportunity for accumulation. However, reading through the latest report from ARK Invest this month, they included a couple of charts which indicate a bigger crash may still be to come. The first chart shows that a true market bottom occurs when the short-term holder cost basis exceeds that of the long-term holders, which has not yet happened. And the second chart shows that historically a true market bottom occurs when the unrealized losses exceed 25% from the market average, which again has not yet been met, suggesting a bigger drop is still to come. So obviously lots of bearish news this month. We are teetering on the edge of a recession, inflation is running rampant around the world, and even causing riots in some countries. So apologies for being the bearer of bad news, but sometimes we have to face things as they are. Okay, to finish up, and let's try and finish on something a bit more positive, and this is the outlook for the mid to long term.
So what I will leave with is what's happened in the crypto market gives you a sense of why it is why it's going to work long run. It's transparent. And there's a lot more trust in the crypto ecosystem because of the transparency and the over-collateralization than I think there is in the traditional financial markets. So bad news is good news, and it's always darkest before the dawn. And I believe we've passed the darkest place. There are others out there. We're reading them in the press. They say we're only halfway there. And I think they follow algorithms. I've watched a bunch of algorithmic behavior that, just chases an idea until it stops. And I think we're getting close to that point where they, who seem so right with their negative stance over the last year or so, will be on the wrong side of that trade.